Hi, everyone. Welcome to the Capital Raiser Show, Season 5, powered by the Family Office Club. I'm your host, Weston Walker, and we interview only the best entrepreneurs and investment managers. Shout out to our sponsors, the Family Office Club, Capitalist Pro, and Invest Next. Today we have Dusty Eddy, the founder of the Eddy Capital Group, a real estate private equity firm that focuses on multifamily opportunities in Phoenix, Vegas, and California markets. He previously acquired about $607 million worth of multifamily assets on behalf of an institutional firm called 29th Street Capital. Dusty, welcome to the show.
Hey, thanks for having me, Weston.
Yeah, of course. So let's go into your background of institutional multifamily, getting experience at that larger firm, and then starting your own firm, which you recently did.
Yeah, so, over 20 years experience in commercial real estate in general. By the last 10 years, I was with a national firm. Was one of the first acquisition guys brought on. I was tasked with setting up the Southwest platform, focus on Phoenix and Vegas. Eventually moved over to Southern California for a couple of years as well. But, their platform was very much local boots on the ground, acquisition folks that ran everything, trade of the grave. So they provided the equity. I went out and got the deals. So with them, I did 22 deals in Phoenix, Vegas, and San Diego area, and did 15 full cycle. Average IRR 42, average multiple of 2.4. So yeah, and
Nice. What's the whole
about a
period?
year, about an average of about 2.5 years.
Nice.
Yeah. So about a year ago, I decided to kind of move on. They kind of did a pivot in terms of moving more towards a centralized model as opposed to kind of the local boots on the ground. And I thought to myself, well, I can do this on my own. I've built up the track record. I've built up the relationships. So I've always wanted to do my own thing anyways. So it was kind of a perfect opportunity to, kind of kick in the butt to do my own thing. So.
For sure. Yeah, so what was the main thing that transitioned you from, working at the firm, the larger firm, doing the deals there, getting the relationships built with the brokers and the investors, and then you have to start over, buying smaller deals, I'm assuming with your partner in California and just starting from scratch.
Yeah, it's totally different. You don't know what you don't know is kind of what I say. So, very much I did 90% of everything at the old firm, but there are obviously, back office stuff, administrative stuff. And from the equity building relationship standpoint, definitely a lot more time than you think when you're kind of just out there looking for deals. So that's one thing in the last 10 months I've really found out is 90% of your time is out there having conversations with equity, building up those relationships. 4 years ago you could probably just find a deal and the money was thrown at you. But I truly believe equity wants to work with people that they trust and know, and so the last 10 or so months, I've been able to really focus on building up those relationships. I have a non-compete with some old investors that would love to work with me, but
Yep,
need to respect that. So, but that's been good. It's been, kind of have to go out on your own then and build those new relationships. And I've actually been a little surprised. Most of the folks I've talked to are I would consider like middle market institutional style firms. So groups that want to write $10 million checks and higher. And at this point, it's about finding the right deals that match up with what they're looking for.
sure. Yeah, so how are you going about reaching out to these investors and where are you finding them?
Yeah, sure. I mean, it's just relationships. Being in the business, commercial real estate for over 20 years, and then really immersed in the multifamily industry for the last 10. You build up a brand, you build up those relationships, and people are happy to make those introductions for you. So whether it's former people I worked with that have moved on to other firms, that they know people, or they're maybe at a new firm themselves and they're now in the LP side and looking to partner with people, and I really believe that equity likes that local on the ground model. I think they want sophisticated folks that can manage their money, but they do like that local boots on the ground kind of personal touch.
For sure. Yeah, and you see a lot of groups from out of state, maybe the upper East Coast that buy deals in Nashville and Dallas, and they just kind of spread themselves thin all throughout the country. But it seems like you're more, boots on the ground driven. So where are you seeing the biggest opportunity today for investors that might be interested in investing in multifamily? There's not as many transactions going on. There's some people are sitting on the sidelines. Actually, a lot of people are. What are you seeing in the market today, and where are the largest opportunities?
Yeah, I mean, ultimately, you have to go after deals that equity wants to go after. But I try to find, where I think there's value in the space. And right now, where I think the most value is truly in value add stuff, older properties, 80s or older properties. Um, there's a lot of folks have, like you said, they're either on the sideline or they really want that brand new build, lower risk, higher demographic type property. But there's that's what everyone wants. So there's a lot more competition going for it, and there's actually not a lot of 80s or older buildings being on the market because a lot of sellers don't believe there's buyers for it. But when they are on the market, you're finally seeing a differentiation in values. You're seeing, 3, 4 years ago, you're paying the same cap rate for an older vintage deal as a brand new deal. Now you're seeing a good 75 to 100 bips, if not more, differentiation. But people aren't really differentiating on location. So the last 3 deals I did with my old firm were at that vintage, and one was in Paradise Valley, Phoenix, very desirable area. One was in Scottsdale, just south of Old Town, and the other one was just on the Scottsdale Tempe border. So all A locations. But there was really no one at the table to buy the deals except me. So it's going a little bit against the grain. But at the end of the day, I thought I got great value on those properties. And I joked 5 years ago, if I would chase those properties out, it came in 40th place. That would have been a huge line of people bidding on the deals. It came in 40th place or worse. And at that time, there was just not enough people looking for the deals. So it was almost name your price on those particular transactions. So I do think there's a lot of value in those. And what I found is raising the equity on those um, actually wasn't that hard because a lot of people is a flight to quality on vintage, but I was stressing it's a flight to quality on demographics as well. And if you can be in an A location, it's back to real estate 101, location, location, location. So you can be in a high quality A demographic, A location, and you address the capital issues. And that's what people are afraid of on the older deals. They don't want to get kneecapped on the roof going out or bad pipes or this or that. But if you go in there and well capitalize the deal, and so you really minimize your risk of having those operational or capital items kind of hit you unexpectedly. Um, so you minimize that risk, but you end up with, a clientele. I think you're in a good spot.
Oh, for sure. Yeah, so you're more focused on the older vintage. How are you going about finding those deals and underwriting them?
Yeah, sure. I mean, it's just 10 years immersed in my markets. I really have a deep relationship with a lot of the brokers, at least in the Phoenix and Vegas markets. The market is controlled by the brokers. There's not a lot of direct to owner type situations. But you can find off market or what I would call like pre-market opportunities when you have those relationships with brokers. They know you're looking for that stuff. They saw that you've bought that stuff in the past, and they see you as the right buyer for it. So you certainly get maybe an early look, if not, a short list look at those type of opportunities.
For sure. Yeah, and talk about your partnership with your partner in California and how that's kind of divided up and what your roles are.
Yeah, so a couple guys left the prior firm, so I've worked with them over 10 years. They left about the same time I did. We really didn't decide to kind of, form a partnership early on. It really was kind of came together. Hey, that he's looking at deals. What are you seeing? Continuing to talk about the market. We really respect each other. And, he was one of the first people at the old firm, and he handled Northern California. I was the third acquisition guy brought on. So, we both brought different strengths to the table, but he handled, primarily Northern California. I handled in Phoenix and Las Vegas. Together, we both handled Southern California, kind of overlap at different points. So we bring a lot of the same strengths to the marketplace, but we add a little bit more diversification for potential investors that may want California, or they, maybe they're a little squeamish on Phoenix right now because of the supply, but maybe they come back around in a couple of years and they want Phoenix then, or they just write off California for whatever reasons, and but they really like the growth in Phoenix and Las Vegas. So it gives investors a little bit more, um, I guess, diversification and working with those.
For sure. Yeah, and you guys have bought deals already, and you're going to continue. I'm assuming the next couple
No,
years. But a lot of people.
yeah, just to
Go ahead.
clarify, we've not bought a deal yet. I mean, it's been about 10 months. So and as you know, the market's been very slow. So there has not been a
Yeah,
lot to look at, but we've kicked the tires on a lot of deals together. There was a portfolio in Northern California and Vegas. We kicked the tires on, didn't really get, to where the seller needed us to get to there. I've been awarded the deal here in the Phoenix market, a little early to talk about, but that could be our first deal. You never know, knock on wood. So,
yeah, sounds good. Just misunderstood there. What's your
yep.
vision with the firm and building out the team? A lot of people start out with 2 or 3 partners, and then they start to build out the team with investor relations, asset managers, things like that.
Yeah, with the old firm, both him and I, we just kind of ran everything ourselves, nuts to bolts, cradle to grave. So once we closed on the deal, we would do the asset management, we would do the construction management. Once we each got to about 4 deals, 4 or 5 deals, then it was like, okay, you get so bogged down in the day to day and the asset management and the implementation of the business plan, it's tough to find new deals. So at that point, I personally hired an asset manager. About a year later, after another deal or two, hired a construction manager. So that's my plan to kind of do the same thing here. And that's what he did in Northern California as well. He eventually hired out an asset manager and a construction manager as well. So that's the plan. That being said, that was the initial plan. Right now, like I said, the things you don't know that you don't know, how bogged down you get on the investor relations side and having, facilitating those relationships and keeping them going. I think I'll probably end up expediting that timeline a little bit and hiring an asset manager and a construction manager maybe after deal 2 or 3 rather than deal 4 or 5. So the
Got
same
it.
general framework that was successful in the past, just maybe moved up a little bit.
Yeah, so sooner. Are you funding that with the acquisition fees, I'm assuming, for
Sure.
those
Yeah, it would be
deals?
acquisition
Yeah.
asset management fees to fund those positions. Yeah.
Yeah, sounds good. I've seen a lot of firms, I won't name names, but some of them charge higher acquisition fees up front instead of, the buy and hold deals where the asset management fee kind of comes down the line. But the higher asset acquisition fee helps them to scale quicker and hire out employees and buy more deals faster, what I've seen.
Sure. I mean, everyone's got a different approach. I'm looking at it as, kind of a very middle of the road type fee structure, nothing that is going to be over the top in order to just scale. So put something in place today that is sustainable over the next few years from that standpoint, and don't get too far over my skis in terms of trying to grow too fast. So
Too fast. Yeah, and
yeah,
working with the larger investors, you said 10 million plus, you kind of have to be flexible with their terms that they demand or put up. So that makes sense. And then you fill the rest with retail capital.
sure. And
Um,
there's certain groups that they made it 100% clear that we don't want to do your first deal with you. Why do they want to do the first deal with me as well? They want to make sure I've got the processes and procedures in place. You can talk a good game and have a plan in place, but until you actually start hiring those folks and they see it implemented, that's when they get a comfort level that okay, he's got the processes and procedures in place as well. So I totally understood on that front, which is another reason probably to expedite some of those hires over what I had thought originally.
yeah, for sure. And talk about the lenders that you work with. You don't have to name names, but the types of loan structures that you plan on using for these deals and what investors should expect.
Yeah, I've got a long-standing relationship with a local mortgage broker here in town. He does national deals. He does all asset types. But I did 19 of my 22 deals in my last firm with him, so he's probably my go-to in terms of the mortgage broker side. But the industry has changed quite a bit. A lot of investment sale brokers now have that in-house. So we really got to like, okay, can I use my guy or should I use a guy in-house? And it gives the investment sales brokers a lot more comfort that they can have a little bit more visibility into how the deal is progressing and whatnot. So certainly open to that. I've done that in the past with as the market's evolved. But at the end of the day, when it comes down to it, I'm more interested in fixed rate loans. My last firm, I did 19 of my 22
Hmm,
deals fixed rate. I'm a kind of a conservative guy from that standpoint. Don't want to, I want to be able to sleep at night in terms of just knowing what rate I have and I'm set, and I can just focus on my business plan. And that's what I plan to do here. The 3 occasions I did floaters on the past, it was totally business plan dependent. One deal I actually tied up thinking I had to go renovate 75% of the property. It turned out that the existing owner we found in diligence had renovated everything. But you don't know this looking at a rent roll because he was renting his renovated units at the same as classic rates. So it wasn't until we got under diligence we realized he renovated the whole thing. So we pivoted on that deal and said, okay, well, all we got to do is right size this rent roll. We don't need 5 years plus with a fixed rate loan to do that. So let's put a floater in that one, and that turned out to be worked out very well, and lined up well with the business plan.
interesting. Yeah, you've seen a lot of groups go underwater in the multifamily space. They're forced to sell deals, and that's kind of the only transactions that we're seeing in Phoenix and these, southern markets is they're forced to sell. The higher expenses and the rising debt costs and the loan just coming due. They've taken 3 year floaters and it just doesn't work out. Yeah, I mean, a lot of investors they would look at you. I mean, you're obviously very experienced from the institutional side of things, but now starting on your own. If someone has an objection, say they're like, okay, you haven't done a deal yet. Why? What would the reason be for me to invest with you? What would be your response there?
I'd say, I've got a track record of doing deals, and I ran the previous platform, cradle to grave, nuts to bolts. Even when that firm grew and was moving more towards a centralized model, I was still underwriting my own deals. I was still highly involved on the, even when I had an asset manager, she'd do the day-to-day asset management and reports and whatnot, but I was still on every single weekly call. So I'm immersed in the market. I've done this. I've built this in the past. At the end of the day, and that's the that's the argument I'd make. Obviously, some people have certain boxes they got to check, and they'll wait for deal two or deal three, and that's fine too.
Yeah, for sure. I mean, you ran the platform for the institutional firm. I mean, you managed a team for that, I'm assuming, and so
Yeah.
how did you go about, recruiting and working with your team members at that firm?
Yeah, I mean, the recruiting side was my asset manager. I worked with her in the past at another firm. It was actually a medical office acquisitions here. She was an asset manager. I was an acquisition guy. So, kind of just reconnected with her, and she wanted to get into the multifamily space. She'd done multifamily a little bit in the past. So that was my one hire at asset management level on this side. And then my construction manager, he was actually a former maintenance supervisor at one of my properties. Got to know him very well. He did a great job. His attention to detail was phenomenal. And when I was looking for the position, actually, he was actually working for Katera. So they were doing kind of
Hmm.
third party turnkey stuff, and they bid out some of my stuff, and I was just like, oh, I almost forgot about you. Let's chat. Would you be interested in coming over? So at the end of the day, both of those were former relationships I had, and they trusted me, I trusted them, and it worked out well. So that's a similar approach I'll be taking and going forward. Is I think relationships are key. Really hiring someone you've worked with in the past for those types of roles is really important. Or getting a recommendation from someone you really trust that this person would be a great fit as well. So
Yeah. Yeah, I mean, some people they start out, building their own firm or working for a firm like you did, like working on the institutional space and then later starting their firm. But some people just go straight into it. And what would you suggest from that standpoint?
you cut out at the beginning there. So just going straight into it, and some people are
Yeah,
going straight
just
into it. What would you
buying,
suggest?
just go straight into buying deals versus working for a firm first and then buying deals later.
Yeah, I mean, I don't know. It's not my mindset to be honest. I worked for a lot of institutional firms over the years. My first position was an analyst at a firm owned by Goldman Sachs. So I think I was very well trained from an analytical perspective. And, I had decided to get my MBA. I got my MBA at Notre Dame during the GFC. And part of that was just getting a comfort level with, okay, I think I'm good on the analytical side. I'm good on the acquisition side and the asset management training, but I wasn't comfortable running my own business. So I was like, I'll go get my MBA and do that. So it's tough for me. I'm jealous of those folks that just jump into something. They have that entrepreneurial mindset and kind of figure it out as they go. I'm kind of the opposite. So I'm not sure I got advice for those folks. To me, it's I could take their advice to be honest in terms of putting yourself out there a little bit more and out of your comfort zone. But I very much was more of a logical approach. And hey, I got to the point where I'm just very comfortable running my own stuff and doing the acquisitions, and I built up the track record and built up the relationships. Making the move to me was almost a no brainer and less risky in my mind. So
Yeah,
at
because you
least,
already have the
yeah,
relationships.
yeah.
I mean,
So I,
that's the
I don't have a
biggest
good
thing is
answer for you there. Yeah,
no deal flow and investors. So that's the only two things you need. With your guy in California, you can do deals there, and then you can be flexible in Phoenix.
yeah.
Kind
So
of
I guess
split.
my only advice for folks like that, I mean, you have to immerse yourself in your market or the markets you choose to be in, and really build those relationships, and that takes time. That's not something you can replicate. I've had
Yeah,
investors that I've been talking to the last 10 months. They're like, hey, would you go to another market? Maybe they're not interested in Phoenix, but they seem to like me. Would you go to Dallas or what have you? And what I tell them is like, I can go read all the market reports, Weston, you can read all the market reports and become an expert on Dallas or Charlotte or you name the market, right? But what you can't replicate is those years of experience and those deep relationships you've built up over the years. And that's just something that's earned. And so that I guess would be my advice to those folks is, get out there and really work on those relationships and focus on that and the deals will come.
for sure. Yeah, I mean, is this something you plan on building your firm over the next 15, 20 years? Like, what's the big vision for you at the moment?
Yeah, I mean, I think my big vision right now is more in the medium term is just focus on, building up a portfolio in my markets here. And if I am going to expand in other markets, it's going to be hiring someone like myself, local boots on the ground that can replicate what I'm doing. So it's one deal at a time, one year at a time. I don't have a 15-year vision yet. It's more of the let's see how this all goes, and if it ends up being just a local shop with 10, 15 deals, I think I'd be very happy. If it ended up expanding to other markets, I'd be very happy with that as well.
For sure. Yeah, I mean, you see a lot of guys build out platforms in other markets and hire, regional managers, say Dallas or Tampa, Florida, things like that, and they build out a team underneath. We had John Pennington on the show, and he expanded. He had a partner in every single asset class with six different partners in each different market, and it was just a huge firm, but he had a small piece of
Yeah.
equity. Versus other people have a huge piece of equity and they have a local shop. It just depends on their personalities and things like that. So, I mean, last question for you, Dusty. What was the best piece of business advice that you've ever received?
Um, did my MBA at Notre Dame. I thought an MBA was just a general, how to run a business type situation, but very specialized. So I ended up majoring in entrepreneurship. But some of my professors there they just stressed cash is king, and especially in real estate. So that wasn't real estate focused courses; those were just entrepreneurship in general. But just the emphasis on cash and managing your cash and understanding you got plenty of cushion. Um, Especially on a real estate transaction where you're doing renovations or value add type expenditures. I think that's the number one thing I focus on when I'm running deals, and I think it's probably I think it's got to be the most important. Most investors want to invest in real estate for the cash flow one. So if you're not be able to give distributions, you're already in trouble. But if you get out over your skis and you run out of cash to address those potential things that pop up during a let's be honest, an illiquid asset class, 3, 4, 5 years, 6 year ownership, something's going to pop up. And being ready for that by managing your cash effectively, I think was the most important thing I've gleaned from anyone.
Yeah, for sure. Not taking on too much debt or taking on too much short-term debt,
Yeah.
especially. So, yeah, I mean, if someone's interested in partnering with you, Dusty, or reaching out to invest into one of your potential deals in the future, how can they reach you?
Yeah, I mean, you can check out my website. It's www.eddicapgrp.com. I'm on LinkedIn as well, Dusty Eddy. So you can reach out to me in those ways.
Awesome. Sounds good, Dusty. Appreciate you coming on.
All right. Thanks a lot, Weston. Thanks for having me.